Now, South Africa's unsecured credit levels are still too small to pose a risk to its banking industry. This is according to the Reserve Bank. Consumers are struggling to repay debt with a 25% unemployment rate, increasing fuel and electricity costs, and an economy that will grow at 2.4% this year, the slowest since the 2009 recession. Here now to unpack this is Mo-tshe-gari, Deputy Governor of the South African Reserve Bank. And on the line is Mo-tshe-gari, CEO of the National Credit Regulator, who also joins us for more. Thank you so much both for joining us. Deputy Governor, if we could perhaps start with you and just on your thoughts, your comments today, obviously picked up by the media that we are not seeing any crisis in the unsecured lending environment. Can I get you to reiterate your stance?
Well, the South African banking system is well capitalized. Capital adequacy in South Africa is standing at around 15.9%, which is way in excess of what Basel III requires of us. Liquidity in the South African banking system is solid, and it continues to flow. The banking sector shows significant resilience, with the ratio of unimpaired advances declining in absolute numbers and as a percentage of the gross loans and advances of the South African banks. So the sector itself is solid, and obviously in your clip what you had talked about then is the role of unsecured lending, which creates a lot of heat rather than effect. So let me see if I can get some rationality into the discussion. The amount of what generally is referred to as unsecured lending constitutes just about 11% of the total assets of the banking system in South Africa. South African banking system assets are just over 3 trillion rand.
About 3.6 trillion.
Right? And what this means is that we then have to look at what is in this unsecured lending. The biggest proportion of what is in unsecured lending is revolving credit facilities, overdrafts, credit cards, and so forth. What had sparked a hit is what we have called personal loans, and that constitute 3.9% of the total assets of the South African banking system. So the basic arithmetic here tells you how small that is. That said, as the regulator, we have not been complacent about it. When you see anything growing very fast or too fast, you ask yourself, what is driving this thing? Can this lead to problems down the line? And as a regulator, we always have been in a conversation. Of course, from the South African Reserve Bank side, we can only deal with the unsecured lending in as far as it comes from the banking sector.
Kevin, I know you want to add your thoughts, but before we get there, Nomsa, if I can ask you to bring your thoughts to the table at this point.
Yeah, sure. As the National Credit Regulator, remember really our responsibility is around consumer protection. We picked up the shift in the consumer credit market early as 2012, early last year. And we called in the banks, obviously, for the reason that, their transactions, they deal in, a huge number of transactions. So we needed to understand what the rationale was behind this shift. We then commissioned a study to dig deeper to understand what the drivers were. We know that in terms of our numbers, because we don't just regulate banks, but we also regulate other credit providers, retailers, employers, and so forth. Although unsecured credit constitutes 11% of the total loan book of 1.4 trillion, our main worry is the ease at which, and the increase, the drastic increase in the unsecured lending book. On year on year, as at December 12, the increase is sitting at 40%. I must add that we have seen a decrease from the quarter ended September 2012, when it was sitting at 47%. So that there's been a contraction somewhat in the unsecured lending book. And we restrict our definition of unsecured credit, by the way, to the, to the unsecured personal loans, which is unsecured personal loans that are extended by the banks and other credit providers. Our main concern as a regulator is the impact that this has on consumers. We are already talking about consumers who are overstretched. There are increases in electricity costs. There's been job losses. And we've also seen through our investigations that there's been, reckless lending. And the aim, one of the aims of the Act is to ensure that, whenever credit providers extend credit, that they must do, proper affordability assessments. And we've seen that there's been contraventions in that regard. So our main worry is really in the impact that this has on consumers.
Mo-tshe, I'm going to get our economist at the table here, Kevin Lings, to weigh in on the subject.
Mo-tshe, can I just ask you this? You've made a clear case that it's a fairly small percentage of the total assets of the banking sector. If you look, though, at that component in isolation, are you comfortable that that type of credit has been done in a fair way? In other words, has it complied with all the rules and regulations? Does it represent reckless lending? Is it being done that the consumer potentially finds themselves under undue pressure in terms of the cost of that credit? Do you look at that aspect of it?
Well, that is where Mo-tshe comes in, because she worries about the market conduct issues. We are the prudential regulator, and for us, when we look at that component, the question that we ask is, firstly, does it pose a risk to the institution that is extending the credit? Secondly, given the concentrated nature of our banking system, does it pose a risk to the banking system? And what I've been demonstrating with these figures is that it doesn't pose a risk at the banking system. And when we looked at the impaired advances, which is basically which loans are not current relative to that particular group of loans, we find that the provisioning by the banks is actually very prudent. It's not something that we would worry about. The question that you raise about whether there is reckless lending, that is the preserve of the national credit.
Let's put that to Mo-tshe. Mo-tshe, Kevin's question being, is there reckless lending, in your opinion, happening as we speak?
Yes, certainly there is. We've been able to identify that through the investigations that we have conducted. Yes, there is some reckless lending happening in the marketplace. Remember now, when we look at the increase in unsecured lending, and the reason why we've been saying that it's not sustainable is that we look at that against the records that we get from credit bureaus, which clearly shows that, we continue to see that consumers are overstretched. I mean, you've got 46.8% consumers who have impaired records out of your 19 million credit active consumers. Almost 50% of those consumers are over-indebted.
So, Kevin, I want to ask you, ABLE obviously has created a bit of hysteria out there around the unsecured lending environment and given a precursor to what potentially can happen to those banks that are exposed. We have got it from the man himself that there is no risk to the banking system, but the consumers under pressure, as we hear from Mo-tshe. How do you interpret all this information?
Well, I would agree with what Mo-tshe is saying in terms of it. I don't think it represents a risk to our banking sector. I think our banking sector is way bigger than that and way more stable than that and way better regulated. And
so do away with the hysteria.
So I wouldn't concern myself about what this means, that it could endanger the banking sector. I don't think that's the case at all. I think the question is, are we creating a problem within a certain component of our consumer base that can destabilize other aspects of this economy? By that I mean, does it accentuate the social tension in the country? Let's say that you've got a group of people who have got a huge amount of credit, they're struggling under the burden of that credit, they're struggling to cope with other costs. Does it accentuate the labor difficulty that we've got in this country? Does it impact other aspects? Does it impact the retail sector? What is the knock-on effect within the broader economy? Not specifically can it bring down or can it destabilize the banking sector? And I think that when you see something, as Mo-tshe said, when you see something growing, credit growing at 40%, you've got to ask yourself, is this too excessive, even if it is in a small category? And the data we're getting at the moment would suggest that yes, in a certain component, it does represent a problem, and it probably does accentuate the labor unrest that we're seeing in the country, and we can't really afford that. What we do about it is the question I'd like to ask Mo-tshe now, is as the national credit regulator, can we do anything about it?
Mo-tshe?
What we've done, as I indicated, we did commission a study to try and understand what the drivers were behind this shift. We have, for instance, finalized the drafting of the affordability assessment guidelines because we'd like to guide industry players in assessing, doing affordability assessments, because we realize that the approaches that they use are very different. In addition to that, our main focus area for this financial year is going to be in education and enforcement. So we also want to make sure that, because we do understand that consumers in themselves are not squeaky clean, that we want to educate, consumers and also emphasize the fact that they need to be very clear whenever they approach credit providers, and they need to understand what it is that they're getting themselves into whenever they approach credit providers for loans. So yeah, there are a number of measures that we are putting in place to address this issue. In addition to, sensitizing various role players, we are in constant communication with industry players, with the Banking Association of South Africa, with the CEO of the banks, to try and make sure that we monitor this very closely.
Mo-tshe, thanks very much for your input there. Let's say just one question. When would you deem it to be a red flag in terms of the level of growth that we've seen in the unsecured lending space? When would you deem there to be a problem?
Well, we do not target growth rates of anything. In the final analysis, what you do is to pick and see whether there are trends that are emerging that worry you. Clearly, any asset base that was growing at 40% had to draw the attention of regulators. We got engaged in the discussions, and you would realize that the growth rate in unsecured lending component peaked in November last year and started slowing down.
So you made the right moves there.
Starting to slow down significantly. South Africans, just be careful what you wish for, because you might just get it. At some stage, I can guarantee you South Africans are going to come around and complain and say there isn't enough growth in credit.
Mo-tshe, can I just ask you broadly about bank supervision in this country and about how South African banks have managed to hold up incredibly well through the financial market crisis? Obviously, you've looked at how other banking sectors got into trouble and perhaps some of the things that they did wrong. From your perspective, what key thing stands out that South African banks have done right to avoid the major pitfalls that, let's say, banks in the UK or the US experienced?
A couple of things. Firstly, I think that South African banks didn't try to be too clever. They did what banks are supposed to do, which is to intermediate between savers and borrowers. Secondly, the quality of bank management and risk management in South Africa is of a very, very, very high standard. Thirdly, the regulatory framework in South Africa is very robust, and in most instances, supervision had been found to be intrusive when we believe that the standards that we have set are not being adhered to. And I think that when we looked back, during the boom in 2005, 2006, the banks thought that we were mad in tightening capital adequacy ratios and provisioning and all of that stuff. Fast forward, when the crisis set in, they looked back and they said, well, these regulators were right.